Instacart shoppers face a tax situation rideshare drivers never deal with. Multiple stores, one afternoon, deductions you'd never expect. Here's what nobody tells you. If you shop for Instacart, your taxes work differently than a rideshare driver's. You're not just driving, you're shopping, storing, and delivering all at once. You use your own vehicle and your own phone for every shift, often for several grocery chains in the same afternoon. That changes what you can deduct. Insulated bags, parking fees, even part of your phone bill. Some of your everyday shopping costs are deductible in ways most shoppers never realize. This guide is built only for Instacart shoppers, not generic gig workers. You'll learn exactly how to track, deduct, and file with confidence this year. Each year, Instacart sends shoppers a 1099 NEC instead of a W-2. For many, that single form raises more questions than answers. Unlike a regular paycheck, nothing is withheld from your Instacart payouts. The full amount you earn is yours up front and yours to plan for later. Because you're classified as self-employed, you owe both halves of Social Security and Medicare tax, a cost many shoppers don't see coming. Without clear guidance, many shoppers report more income than they need to, missing deductions that could have kept thousands of dollars in their pocket. On the other side, some shoppers underreport income or expenses, risking penalties and unwanted attention from tax authorities later on. Shopping for several grocery chains in one afternoon means separate stops, separate mileage, and separate receipts to track, all in the same business. When the same car and same phone cover both personal life and work, it's easy to blur the line between what's deductible and what isn't. Missed deductions, skipped quarterly payments, or inaccurate mileage records can quietly cost Instacart shoppers hundreds or thousands of dollars a year. As an Instacart shopper, you're classified as an independent contractor, not an employee. That single classification shapes every part of your tax return. The 1099 NEC reports your total non-employee compensation for the year, the starting point for calculating what you owe and what you can deduct. Unlike a W-2 employee, no employer withholds taxes for you or matches your Social Security contributions. The full responsibility sits with you. Self-employment tax covers both the employee and employer share of Social Security and Medicare, currently around 15% of your net earnings. Rideshare drivers mainly deduct mileage and vehicle costs. Instacart shoppers add shopping supplies, in-store time, and multi-stop routes into the mix. Once you use your car for shopping and deliveries, it becomes a business asset, and the business portion of its cost becomes deductible. Even when you shop for several grocery chains in a single day, it's still treated as one self-employed business for tax purposes. Your business income and expenses are reported on a form called Schedule C, which then feeds into your overall personal tax return. Because no tax is withheld from your payouts, the IRS expects self-employed workers to send estimated payments 4 times a year. Good record keeping means saving receipts, logging mileage, and noting expenses as they happen, not trying to remember everything in April. The biggest insight for Instacart shoppers, mileage between stores counts too, not only the drive to a customer's front door. Driving from one grocery chain to another during a shift is deductible business mileage, even without a customer in the car. The drive from home to your very first stop of the day generally counts as a personal commute, not a deductible business mile. You can choose between a standard mileage rate per business mile or tracking actual vehicle costs like gas, repairs, and insurance. Insulated grocery bags and coolers you buy for shopping trips are legitimate business supplies, fully deductible as ordinary work expenses. Since your phone runs the app, tracks routes, and handles customer messages, a reasonable percentage of your phone bill becomes deductible. Parking fees paid during shopping trips are a small but real deductible expense that many shoppers forget to track over the year. Cooler packs, hand carts, and other small tools bought specifically for shopping trips are also deductible business supplies. If you track actual expenses, a percentage of maintenance, tires, and repairs tied to your business mileage share becomes deductible too. Mileage, supplies, phone use, and parking together form a complete deduction picture that meaningfully lowers your taxable income. The most common mistake: shoppers simply don't track mileage, missing out on one of the largest deductions available to them. Many shoppers misunderstand the commute rule, either deducting the drive to their first stop or missing later legitimate business miles. Shoppers often log delivery mileage but forget the miles driven between grocery chains during the same shift, undercounting real expenses. Claiming the entire phone bill instead of a reasonable business use percentage is a common overreach that can trigger extra scrutiny. Insulated bags, coolers, and small tools often go unlogged, quietly leaving legitimate deductions unclaimed year after year. Without safe receipts for parking, supplies, or maintenance, shoppers lose the proof needed to support their deductions later on. Skipping estimated quarterly payments can lead to a larger bill and added penalties when the full year's tax comes due at once. Adding personal errands into business mileage logs can overstate deductions and create problems if records are ever reviewed. Using one account for both personal spending and business expenses makes it far harder to identify what's actually deductible. Trying to reconstruct a full year of mileage and expenses at tax time is stressful and often leads to underestimating real deductions. A simple mileage tracking app running during shifts automatically logs every business mile, removing the guesswork at tax time. If you prefer pen and paper, a simple notebook log with date, starting point, ending point, and purpose works just as well. Multiply your total business miles by the standard mileage rate for the year to quickly estimate your vehicle deduction. Add up gas, insurance, repairs, and depreciation, then apply your business use percentage to find your actual expense deduction. When you buy a new insulated bag, save the receipt and note the date and cost directly in your expense log the same day. Estimate the share of your phone use dedicated to shopping and deliveries, then apply that percentage to your monthly phone bill. Keep a small folder or envelope specifically for parking receipts so they're ready and organized when it's time to file. Picture a single afternoon shopping for 2 different grocery chains. Every mile between them is logged as legitimate business mileage. Take your estimated yearly tax, divide it by 4, and set that amount aside each quarter to avoid a large bill in April. A simple habit: set aside a fixed percentage of every Instacart payout into savings so quarterly payments are never a surprise. A dedicated bank account for shopping income and expenses makes it far easier to see your true business finances at a glance. A basic spreadsheet with columns for date, mileage, and expense type turns scattered receipts into an organized yearly record. On Schedule C, list your total shopping income, then subtract mileage, supplies, and phone costs to reach your net business profit. Simple software works well for straightforward situations, while a tax professional adds value once your shopping business grows more complex. Spend just 10 minutes each week updating your mileage log and expense notes, and tax season becomes far less stressful. Once a month, review your receipts and expenses together, catching anything missed and keeping your records fully up to date. Set simple calendar reminders for each quarterly payment date, so estimated taxes are never missed or paid late. At year's end, compare your own income records against the 1099 NEC you receive, making sure both totals line up correctly. A small, steady tax savings cushion built throughout the year protects you from surprises and keeps quarterly payments stress-free. Mileage logged, receipts saved, phone percentage estimated, quarterly payments made, each milestone builds toward an accurate return. Millage, insulated bags, home percentage, and parking fees form the core deduction checklist every Instacart shopper should track. Once your shopping income grows or your situation becomes more complex, a qualified tax professional can offer real peace of mind. As your shopping income increases, revisit your quarterly payment estimates so they keep pace with your actual earnings. Consistent, small habits throughout the year turn tax season from a scramble into a simple, confident final step. As an independent contractor, you receive a 1099 NEC and take on full responsibility for reporting your own income and taxes. Insulated bags, phone percentage, parking, and vehicle costs form the deduction set that fits your specific shopping order. Tracking every business mile, including store-to-store driving, remains the single largest deduction available to most shoppers. Steady quarterly payments and a clear Schedule C bring everything together into an accurate, stress-free year-end filing. Start your mileage log today. Save your next receipt and take the first small step toward a stress-free tax season this year. With the right tracking and a clear filing plan, you keep more of what you earn shift after shift, year after year.